Oftentimes, it's something that's wanted by some of our audience that's they want me to sugarcoat Big Bear AI stock. Now, while most people say Big Bear AI is, done, the facts tell a different story and it might shock you. But let's also be clear here, I'm not pushing any agenda. I'm not here to pump the stock or talk you into a position. You're entitled to your own opinion, and I respect that. Now, I'm here for one reason, and it's to give you guys insights and curiosity of facts so you can make an informed decision. Now, that's it. That's all we're doing here. I'm not here to tell you what to buy, what to sell. While I have long-term positions in Big Bear AI, that could be seen as a bias. It's possible that that could be true. I do maybe have a bias. So just letting you know that's the case. Now let's start off with the obvious. Big Bear AI got hit hard after earnings. The stock recently sold off about 25% in a single session. And those are the types of things that shake retail investors out fast. And the chart looks pretty brutal. We see it sell down here to this level it was back in June. And it's these types of plays with mid-cap AI companies that are big swings that happen right around earnings. The volume spiked big here. You could see a big volume spike. And the sellers, it wasn't just a few sellers. This was a big repositioning on the stock. And it had real retail panic. Now, are they adjusting exposure? What does the insider transaction report kind of look like? We saw AE Industrials move some of the stock. We saw that the most likely we see some BlackRock movement in there on earnings. And here's the deal. When we see the movement with Big Bear AI, there's only a few things that this really leads us to believe. Here's what actually happens in their earnings. When we pop up into their financials, you can see they don't have it updated here on Google, but if we jump into the earnings report, let's head on over to the company's release yesterday. Revenue decreased by about 18% to 32 million, second quarter 2025. The margins that we see is just about 18% down from previous year, and then in the same quarter. And then you have the main cause of that is due to lower volume on certain Army programs. The gross margin was 25% in the second quarter of 2025 compared to 27% in second quarter 2024. So the net loss here, this is where it really kind of shook, is $228 million in the quarter, which is significantly more than the same quarter last year, about 14 million. Now, this is where we could start to kind of insert the guidance, the outlook, which tells us how we could potentially see them in the next 6 to 12 months. They adjusted their revenue between $125 million and $140 million for the rest of the year here. Now, that would indicate that they're still looking to grow revenue in the next few quarters and to make at least about $30 million to $40 million per quarter. Not too bad for the company, but really where we saw them shine is going to be the cash that they increased on. So we saw them increase their total assets very significantly. They're up to about $600 million there in cash, which is pretty tremendous there. And so they do have some debt, but overall they're positive and they're building their cash. The problem that we see is these aren't the numbers of a company that's going to be collapsing tomorrow. When you have a net income negative, I mean, they have a lot of cash. So that's the first thing. I know a lot of people saying it's over, we're done, the stock's done because they have a bad earnings. That's not the case. I mean, look, they got a lot of cash. It's very similar to what you could see with another company like SoundHound coming in with even more of a negative net income and still building the infrastructure. So that is why we also need to separate the hype from the reality, right? They have the runway, and so the hype case is, oh, but they're gonna crush it, they're going to do well. And this is kind of what's happening. They're a company that's expanding infrastructure. They're building infrastructure. So they're building their very scan technology into the airports. Now, imagine that you have PG&E or whatever company is building the electrical lines that are in your local area, the grid that you get your power from, so the electricity. When a company is starting up in that instance, they're going to have big negative net income. They're going to be building out the infrastructure, and it's going to look really bad on the financials most likely as they're building out the infrastructure. They'll probably have a lot of cash and their backing will look good, but their income and revenues will not look good because they haven't turned on the power yet, really. They haven't gotten to, get the revenue from the customers or what have you. And they've recently secured some contracts in Department of Defense. We know that their CEO is working in relation to the borders and Homeland Security, and that's where they are. They're at the borders and Homeland Security. So for those of you guys, as we kind of look at the numbers, they're not lying. It's showing negative net income. It's showing they're expending, and they aren't seeing they didn't see any revenue increases, right? Revenue basically stayed flat to a little bit down. Now, that's what the numbers show. Now, the trend, over the last 3 quarters has kind of been like that, flat, more or less revenue. And for BBAI, they're also not just another AI company. It's kind of like, imagine you get a deal with, let's say, Apple. And Apple says, oh yeah, we're going to have you do the cameras on our iPhone, and you have a bunch of cameras that you're going to be putting in the iPhone, let's say. Now you are going to have to go work with their team, get the iPhones in there, and then you're going to get the cameras in there, and then you're going to have to spend a ton of money to get the cameras ready, get the infrastructure ready and they haven't even sold the iPhone yet. And so that's kind of what's happening here. They have the very scan technology. According to their earnings, Kevin McElhaney, the CEO, said they were out in 12 airports. There's been some reports that they were at 17. When it comes to the sentiment versus reality, what do we got going on here? Well, there's a strong support here around $4.75 and really a support around $5 as well. And they bounced there yesterday. So here's my stance. This is not like a back up the truck moment, but it's also not, a funeral for some people that think it is with BigBear.AI, that it's done after a pullback like this. Right? If I were trading this on the short term, which at the moment we just wrapped up our live session this morning in Stock Meet, we weren't forcing any trades. We didn't even make any trades this morning, and that's fine. But if I was watching here looking for the support levels and what we see here, we got a support around 475, 467 in here, and then they got a $5 support. Trying to now recover. They recovered about 12% from the dip, I believe it is, or about 15% from the dip after earnings. They've already recovered about 15%. So, we're looking now in this move up to that 536. And I'm going to watch this support. We got to look at their contract announcements, and definitely got to keep some alerts on for unusual options activity. But I'll tell you what, the number one thing you need to know here is it's like, again, let's say that we're selling plants to Starbucks, and Starbucks, so we want to spruce up our Starbucks and make it nice. They got thousands of stores. I say, okay, great. They say, yeah, let's do it. Now I got to go get a bunch of plants and get a bunch of pots, and I'm going to spend a lot of money, invest a lot of money, change my whole business to get ready for the Starbucks. They got the World Cup coming up. They have the Olympics coming up, and they're trying to expand aggressively, and they got the cash to do it. And so most likely, without hype, without this is going to go to the moon, I have no desire to say anything like that, but just not with fear, not with hope even. The truth is, whether you buy or sell, you should be making that decision based on facts. And I think the infrastructure they're building, it makes sense that they're going to see some growth. And TSA, they haven't renewed with Leidos, Leidos is the place, where they have the scanner. You go to the scanner and they scan your body like this. Or what's the other thing they do? They have these scanners that scan the baggage. Big Bear is looking to get this U.S. Department of Homeland Security request for information. You're creating the TSA checkpoint of the future. they're looking to be this company that does the biometrics. This is what TSA says they're looking for. They say they're looking for AI-driven threat detection. They are looking for biometrics and AI and machine learning driven detection for carry-on and checked baggage, but also advanced accessible property, body scanning, alarm solutions, and biometric ID verification tools. Again, that's exactly what Big Bear does. BigBear.AI, has the VeriScan, which is the facial scanner, but then they also have this X-ray type thing that Leidos has, that it can scan the baggage and threat detection and be able to use AI to identify different things. Now, basically, if we're going to see any build outs of this technology continue, Big Bear AI is in a good market, and most likely they'll see some growth over the next few years. But we do see pretty big focus from BlackRock and State Street and Goldman Sachs, along with AE Industrial Partners. So most likely, we're going to see them kind of hold around this $5 range. I mean, is it possible they drop down to 280, consolidate, take a long time to build into their story and a long time to get back up into these levels? It's possible. It takes a long time. It is. But with a stock like Big Bear and the AI market that we're in, I think it could also be that we see it happen in whatever time frame that we're expecting as far as stock movement may actually be faster than we expect because they're in the AI market. Now, in any other market, yeah, I would think it would take longer, but because we're in an AI market, they might price in for what could be a lot sooner than investors might realize. So that's going to be the level we'll watch here at 475, recent support. After a 15% recovery since the dip yesterday, they are approaching this resistance here at about $5.50, which they have not touched today. We see them start to push up here into Tuesday. So they got a $5.50 resistance level here. And so they're looking to really get back into that level. That is going to be their next resistance. After that, they're going to have to wrestle with $6 a share if they can make it up to there. But again, that support there around $6 a share is still far out of reach, as they got to break above 550, and we'll still see if they can even hold this 475 $5 range that they've recently bounced on. So maybe it's that new support. They're validating it from previous levels, and they're back to where they were back in June. I think it might have been an earnings report here where they sold down to this level. They've sold off on 86% of their earnings reports. It's not new that oftentimes happens. But again, this was about $4.70 they sold down to last time, found a support, consolidated, and jumped back up and continued to rally. They just sold down, and obviously, they're at the exact same price point, about $4.70 there. And they're kind of right now consolidating, trying to hold that level. So we'll be watching them closely and keeping you up to date on it if you'd like to. Some of you guys say you're done, you don't want to touch it because of an earnings report like that. By all means, there'll be some good stocks we'll be covering, including our data center picks, APLD, AMD stock we definitely cover in the quantum computing market, as well as space tech are the industries I like to cover. If those interest you, we encourage you to subscribe. And if you want more of a deep dive, fact-based stock analysis without the hype, hit subscribe down in the second link in the description. If you want the real-time watch list, we come out with different earnings along with their targets for the week. So we got our exciting earnings that just released here yesterday, and we have all of the companies, our targets for them, along with when they're reporting earnings. And you get my real-time watch list, live breakdowns every single morning at market open of plays before they move. Again, we didn't trade this morning, but usually we'll trade right around market open. We were there live, but we didn't make any trades this morning. And if you want to see us trade live, see the entries and the exits, check out Stockmates. It's the second link in the description down below. I believe that's where your real advantage will be if you're getting value out of the videos this far. If I earned your thumbs up, hit the like button, do consider subscribing, and I'll see you in the next video. Thank you.